All right, we should be good to go. Let me know if you guys can have a 5x5 on your end, can see the screen, voice, all that good stuff. And we'll get started and get down to business. Perfect. All right. Well, let's see how YouTube treats us here today. I've had some good experiences with YouTube, amazing experiences, and on the bad end and everything in between, but everything looks to be moving smoothly here. So, back on YouTube after about 5 months, I believe. And I wasn't planning on streaming today at all, actually, but the flight that I was supposed to get on today got canceled, so I scheduled it for tomorrow, and here we are. So, Squeeze, good morning. Good to see you, brother. Looking on the chart here, okay, look, we're going to look at this daily chart here, and I mean, it's obviously ridiculously being held and overly manipulated, okay? Does this mean it's untradeable? It's 1000% not untradeable. It's tradable. Myself, I have proven that. Other people have proven it. You just can't be greedy, okay? You got to be content with enough. Go for low-hanging fruit until we leave this range. Now, I will say, even though I'm typically not the guy that tries to pick tops or bottoms, when we're in this tight consolidation like this, we have multiple attempts, like really aggressive attempts to drop lower, like these really like crazy gap openings, right? And it fails to get down there and just generates these three wick lows. Okay, that's going to be sell side. And then we rise up very aggressively. And what are we doing? Well, we wick up here, trade off, and I'm viewing this as more engineering of buy side liquidity. So I would prefer to see the upper end of the range explored, right? And then they use that kind of as a breakout idea, accumulate those short holders at a higher price to then send it lower to the low end of the consolidation. So that's what I'm preferring at this point. I don't need to be correct about that to make money, but that's definitely what has my attention. Now, right now, this rally that we see in price, I like that. Why? Because we're delivering off of several key arrays. So if we go into the 15-minute chart real quick, okay, you're going to take note. This consolidation from yesterday, these lows right here, okay, number one is relative equal lows. Yes. But why are these actually important? Here's midnight opening 00.00 on Monday. Here's where we open. Look to the right. These are the most significant lows formed after that midnight opening. After that daily candle opens, we have these relative lows generated. So this is a time-based sell-side liquidity pool, and we've just ran that from the marketplace right here. Okay? And what ensues, and the main thing that I look for after running a key pool of liquidity like this, right, is some form of change of state delivery. And we have that taking place right now above this down candle. That's going to be our classic change of state delivery. So this down candle, why do I deem this as a change of state delivery high probability? This down candle forms, it drives us down into sell side in a higher time frame key level in the form of this balanced price range that I have extended out to the right side of the chart. So if you need to see a visual representation of that on the real time frame, okay, that's right here. Extend it through. That's it. So let's go down to the 5-minute chart. All right, this thing's getting very aggressive. To be honest, I didn't really think we were going to get this much volatility at the 9:30 opening because we have a 10 a.m. news driver, and the protocol myself and my Discord family goes through is, we literally just like mentally or physically plot a line right here at 10 a.m., right? Every single move that I want to be a part of, right, I want the manipulation to ensue first, right? So I want to see that manipulation in price, which is usually going to go in the opposite direction of where it really wants to go, and then I'm going to look to take the trade. So I allow, everyone that wants to rush to do something to break their selves, I'd be patient, allow the manipulation to come into the marketplace, and then I just simply find my entry post 10 a.m. So I believe today honestly, I don't really care what the data is ever. All I care is that it's going to instill volatility and just kind of amplify whatever I'm anticipating right now. So as you can see here, right out of the gate, I mean, 930 is on a mission here, obviously. Um, Little to no retracement, just straight shot to the upside. And it's really not a surprise. The only surprise here is how much volatility we got at 930 prior to the actual 10 a.m. news rate. So when I say it's not a surprise, I mean, I'm looking at this ridiculous trend line here. Look at this. Relative equal highs, which is my main focus here today, by the way. Lower high, lower high, lower high, lower high, lower high. Anytime you have this type of build up to the downside, okay, I'm automatically like anticipating that to be smoked when the time is right. And that's going to be at a news rate, 9:30, whatever the case is. Okay. I will say another thing that I'm noting here as well is yes, we have this really prominent magnet on price down here at New Week Opening Gap. I'm understanding that, but I'm also understanding that we really didn't have a willingness to retrace back down into that. We had a chance yesterday, didn't do it, just kept pressing higher. Today, dropped down a lot since the midnight opening right here, or where you at? Right here, excuse me. We've pressed down a lot, and once again failed to get down there. So, I'm definitely bullish here today. Like I said, if any trades do take place, you definitely have to go for low hanging fruit, given the ridiculous daily range that we're currently within, right? And it just comes back to like this is one of the classic times inside of the marketplace where it's like a lot of people are fearful, they're throwing in the towel early, especially newer traders, and like this is just like an amplified, glorified beginning of the year. Like usually we're in some type of accumulation range or consolidation range in the first 2 months of the year. This year, it's the same exact thing. Nothing's changed. Like I'm not surprised to see this action whatsoever. All it is it's just kind of on steroids, right? We're having crazy openings like this, like 1,000 point drop down, another huge Sunday opening here, like so on and so forth. So it's basically just an accumulation range of the first 2 months of the year, with just more volatility. That's all it is. So, nothing to be afraid of here, other than, you obviously don't want to over leverage in this price action here because you're gonna find out real quick. But anyway, what time is it? So we about 4 more minutes until the fireworks here. Okay, I'm really anticipating of what this 10 a.m. news driver does. To be honest, preferably we're gonna open at the 10 a.m. news driver, fill in this for Vega, leave the rest of them open, and then we'll see pricing to the upside. So at this point, this is what I prefer to see at a price. We'll see if we can get it. And actually, this current low resistance state of the marketplace is pretty refreshing as to what we had yesterday and what the Discord and I sat through. So we'll see if this can ensue and continue through 10 to 11 a.m. time window. Okay. So I expected to kind of contract a little bit. Let me take a look at ES here while we're waiting. About 3 more minutes here. All right. Now, if you have an open position prior to 10 a.m., okay, I'm praying for you, okay, because you're absolutely gambling. You're probably going to lose money, and you can easily get whipsawed. Now, if you trade right before 10 a.m. news drivers are at it, okay, and you make money consistently, don't listen to me. Whatever, do your thing, make your bread by all means. But from my experience, 5 years of it, it's always going to be in your favor to wait for that 10 a.m. news driver to come out and then look to trade. So notice how ES has some unfinished business here. It has yet to kind of attack this entire trend line. I'd like to see the entire thing be swept out of the marketplace. So don't get me wrong, I'm not anticipating a reversal right here. I'm definitely anticipating higher prices, but I would ideally like to see 10 a.m. create a little short-term drop down, okay, below these lows that are being stacked up. So for anyone that may have bought down here, right, they're going to be trailing their stops immediately every single time. There's like whatever the first swing point that's created after a huge rally like this, okay, there's always by default going to be a very large short-term pool of sell-side liquidity jammed below these respective lows here, okay? So I really have my eyes on New Day opening gap here. This is definitely going to be the first target. that I'd like to see price drop into. Okay, so we're gonna basically all I'm doing here is this is the true day opening. Okay, and then this is where Monday close, previous settlement daily closing. Okay, this is very important price points because they work as a magnet and offer fair value to larger funds. Okay, so right here, this is where the candle opens and this is where we close. If I can zoom in a little bit. Okay, and all I'm doing is taking Monday's closure to Sunday's true opening at 18.00, and I'm extending this range forward, anticipating price to draw up into this like a magnet. Now, do I want to see price reverse at this point? Not really. Okay, I would like to ideally see it reach up into these relative highs as well, slash previous daily high. So I'm going to go ahead and map that out as well. So this is definitely my bias for the day. This is definitely what I'm looking for. It's what I'm anticipating. I'm only giving you one side right now. I'm not saying, oh, you know, sell side might get hit. Oh, and also buy side up here. And then whenever one hits, it's like, you know, look at me, right? I'm calling one side as always. However, what would actually change my bias here? Like what would turn me away from what I'm looking at here, which is higher pricing? Well, I'm watching this midnight opening here. And let's say that instead of dropping down, right, instead of dropping down like it is here on a short-term basis with 10 a.m. So there's 10 a.m. by the way. Let's say that it rallies to the upside here, right above midnight opening, clears the highs, and then has this aggressive drop down, right? At that point, and like starts going through like this Ferrari gap here, specifically midpoint. If it breaches the midpoint here, that would kind of kill my idea. But anyway, actually beautiful 10 a.m. news driver there. So very quick, was able to spike out those short-term lows I was speaking about. Okay, and it's now gone to the upside. So whatever I said whipsaw, this is quite literally what I was talking about. Back and forth. Okay. So yeah, like I said, anytime, like if you're going to take anything away from the stream, okay, look for large rallies, large drops down. Every single time they form those short-term lows or highs, okay, they're going to kind of, you know, maybe give them a little bit of hope, leave them behind like they did here, and then ultimately take those out, and then the market then is free to continue where it wants to go. So wow, Dow is ugly. I don't think I'm gonna do anything with Dow today. Not that I trade it, but I definitely reference it real time. Now the only good thing I can say about Dow is it was the only one that reached new week opening gap, so you can see that fair value was delivered inside the market. Once again, I mean, these highs are just entirely too artificial. I would like to see price upset that and obviously spike through. But it's a matter of, can we push up there in a nice fast sensation. All right, so nice rally there. I mean, it would have been nice to long this 5-minute Ferrari gap, but then again, it like left it in a split second. So I mean, to get a fill on that, I mean, probably a little unrealistic. But if you got a fill on that, good job, right? Good job. Now in this context, where would your stop go? Well, if I was lucky enough to get this fill, 21,765, stop would have to go below these up candles right here at least. Yeah. So anyway, I don't think price should have any trouble getting up to new opening gap here now. We'll see what it does though. Definitely nothing in here that I would long or try to chase, because I mean, although I'm bullish, like if there's a moment for them to be like, oh, gotcha, get it, come get me, and then as soon as you enter, it goes against you, that would be right here. Okay, so, you know, if you feel any type of emotion, like let's say you're bullish and it goes in your favor, right? That's like the classic phenomenon where you're like, see, I was right. Let me get in that because I want to be right and make money. I can't be right and miss the move. It's gonna happen. You signed up to be a trader. You're gonna miss moves. You're gonna be correct, and sometimes unprofitable. All right. But anyway, taking our actual dealing range here. Okay, you're always gonna utilize previous daily high. Okay, right here. Down to the low that was created. So whatever low we're coming off of that originates the reversal, right, in favor of our bias, which is obviously right here. We have this old daily high right here. This is Monday, previous daily high. Down to the low. Remember, we're only anchoring this low down here and considering it as significant because it reached a higher time frame key level. I told you that. I showed you that right here. We come up off of that. Why would this 5 minute fair value gap be a good entry, right? If you're able to get filled. Once again, it was right at 10 a.m. and left it in a split second. Here's equilibrium. What's the most significant array down into a discount right now? This 5 minute fair value, or excuse me, this 15-minute fair value gap right here. So you'd be buying a discount fair value gap and aiming for what? Premium new day opening gap slash fair value, and premium previous daily high. So, I mean, it's going to sound fancy when I say it. I don't try to throw fancy words in here because, overcomplication is a very big issue in today's trading space. But this right here is quite literally what we call the PD array matrix. So essentially, you're just utilizing, if you're bullish, some type of discount array and then exiting at a premium array. So discount fair value gap in this case to premium fair value slash new day opening gap. All right. Dashad Banks got that new day open low up there. I'm not sure if I'm familiar with new day open low, but if you would elaborate, I'm all ears. All right, so ES is a little bit tricky here. Okay, so I'm definitely still bullish here. Okay, but you gotta be patient here. Like I said, there's a moment for you to get in here impulsively and try to chase the move, just for you chasing that feeling of being right. This will be the moment where you kind of trip yourself up. So if you're relaxed, you're patient, you avoid amateur hour where it's usually that opening range or right at the news driver. Okay, you'll avoid all the low quality fake setups. All right. So obviously in a range here, I was thinking it was gonna just run and ramp straight up into new day opening gap, but it's a very short-lived rally, right? And then immediately spikes down. Now, one more thing. I don't want to, I never like having too many lines on my chart, but one more thing that I have to annotate here. It's going to be the midday opening. All right, and we're going to put that as a dash line. Did it get it on the regular NASDAQ? Yeah, no, we didn't reach new day opening gap. We almost got it. I thought we were gonna get it, but right now we're kind of ranging a little bit, which is really normal. Okay, I'm not looking at this as, oh, it's gonna be low probability. No, it's just moving, whipsawing like I said it would right at 10 a.m. because it's a high impact news driver, right? And it can really do one of two things. It can create a sensation like this, or it can just be really one-sided directional and create this huge move like it did specifically with 930 here. So honestly, I'm not surprised to see a lower volatile 10 a.m. news driver whenever 930 created what? We opened, trade down to 21,700. And yeah, rallied almost 100 handles from 930. So caught the sell at 7 a.m. and buy at the bow. Wow. Well, good for you, brother. You should. I mean, honestly, if that's true, you should be closing your laptop right now and go buy a Lambo. No, but in all seriousness, no, I would definitely close my laptop at that point if I caught those two large moves. we're between two 4-hour fair value gaps and reacting on to both on ES. Well, I mean, we're pretty much we're in between everything right now, right? This daily range. It's a tough one, but like I said, I'm definitely still bullish. By the way, okay, I almost forgot to annotate this. Okay, we're kind of utilizing this old new week opening gap here. Okay, and it's nothing fancy. Okay, don't be like, oh, why are you mapping out these levels? Okay, it's just real logical levels in like a support and resistance sense. Like you're utilizing these. This is real support and resistance. Okay, so it's not just, oh, okay, well, we reacted off this high once, twice. I'm gonna put my line there and think it's gonna react off that high again. No, this here is levels of fair value where smart money is actively engaged inside of these price points. Okay, so that's how I view that. I mean, if you don't submit to that idea either, like I'm not, this isn't a be all end all type of environment. Like whatever makes you money, you know, feel free to share. But anyway, what I like here is we're now that it's anchored here, okay, where all the bodies are significantly respecting this new week opening gap low. Ideally, we will hold that and then maybe create another rally to the upside, create some type of array gap to then utilize that to send us to previous daily high. Oh, by the way, I'm going to go ahead and pop on. So nothing fancy here. Once again, okay, we're on electronic trading hours. That's what we trade. Simply just going to pop on regular trading hours. Okay, so as you can see here, we filled in the regular trading hour gap. So here's where we opened at 9:30. Obviously had a really aggressive rally there and almost completely closed in Monday's previous sentiment closing. All right. And not to mention, we filled in yesterday's to the T midpoint, which is beautiful. Let's check out ES. Pretty much same deal. Okay, ES was able to drop down into yesterday's regular trading hour gap, about midpoint of today's. I would like to see us, right, get above midpoint of today's regular trading hour gap, kind of use that as support, and then take us up into the highs. So that's ideally what I'd like to see. Dashad Banks. All right, so some of the course. I'll buy it. I'll buy it. I'll support a brother. No, I'll tune in though. I'll tune in. I'll see what the deal is. So yeah, obviously once again we're entering a little bit of a range here. I like whenever I see this type of stuff, I just know it's building up to the real move, and I don't feel anything at this point. Like I don't feel the itch to press either of these buttons right here ever, unless I see an undeniable model, specifically my model, of course. And I just sit here, relax, and watch it. Okay, that's how every single session of yours should be. Okay, cool, calm, relaxed. Okay, I understand a lot of people love the WWE trading stuff and the entertainment side of it, but obviously I'm here to make money and pay my bills, and that's it. That's all I'm here to do. So I love this formation, the down candle. I want to see this stay intact. I want to see like a real prominent expansion, second expansion out of this consolidation range, right? And leave this down candle, and I want to see it obviously keep that higher and not trade through this 15-minute down candle formation, okay? Because once again, we're pulling on our fib. All right. Now, I'm not going to give away too much here since I'm obviously on the free live. But just know that this down candle is very significant to me, and I would like to see price utilize this as support to take us up to a minimum new to opening gap. Lisa Long, I have 3 models. I don't have any names for them, so I just kind of winged it and called them Model 1, 2, and 3. But yeah, I trade them every single day, Monday through Friday, and obviously put them in video format inside of my Discord, so all that good stuff. So I'm liking how we didn't have too much displacement to the downside right below that midnight opening. So I mean, it's realistic to see this type of phenomenon. Because what did I tell you? Anytime there's a real aggressive move in price, in this instance, that's to the upside, right? Where was the first significant swing point formed? That was right here. We had a rally, created the swing though. What do you think's taking place there? Anyone that's long or wants to long and chase the move here, they're buying, jamming their stop right down below that low. Right at 10 a.m., spikes that out, delivers the fair value gap, and what I like is that it's leaving majority of it open. Okay, this is exactly the type of stuff you want to see in a lower resistance environment in your bullish, right? Supporting your bias. You want to see fair value gaps like this remain open. Okay. And what kind of adds to that conviction now is the formation of this actual down candle. So matter of fact, I'm going to go as far as to even take an entire rectangle here. Take the low of this down candle to the high. And we're going to reference the high, midpoint, and low on the lower time frames. Dashad Banks, are you really an OG like that? You've been here for the 3 years I've been here, huh? I started YouTube about 3 years ago, I think. Yeah, a little bit over 3 years. Well, I'm glad to have you back, that's for sure. Yeah, I don't know. I'm thinking I'm gonna have to be really reliant on the 1050 to 1110 macro here, to be honest. So, we'll see what ensues here, but right now it's obviously being held in the range, which, like I said, I don't view this as, oh, it's chop and this and that. No, I view this as reaccumulation to then eventually send price higher when the time is correct. Okay, so. So did we pierce out? Okay, so the only thing is here, we did upset the entire trend line. Like, obviously it would have been preferred to, be a buyer down here, but once again, I mean, rules are rules. Like, I don't care what takes place. Like, sometimes, there might be a move right before, like, prior to 10 a.m., whatever, but my rules and what I've derived from 5 years of experience, because like, a lot of times I would try to trade right before 10 a.m. or like right after 9:30, like before 10 a.m. news hour. And over time, right, you make those mistakes, trial and error, and you realize, oh, wait a minute, maybe I should just wait till 10 a.m. to come out and then take a trade. And that worked out a lot better for me. I preserved a lot more capital, and I made more money trading that way. So that's what I stick to, okay? The protocol is at least, you got to give it at least 5 minutes after 10 a.m. And then, whatever happens after that inside of the kill zone, okay, which is 8:30 to 11:10 a.m., okay, then I'll look to trade. So, I mean, beautiful delivery out of this 15-minute fair value gap. Obviously, I want to see this remain open, ideally, especially since we created the change of state above this equilibrium down candle. But I want to see us really get some volatility here. Let's check out ES. All right, so Dow is obviously hideous here. That's no doubt about that. So yeah, there's not going to be much of a use for Dow here for me today. So I'm going to quietly exit that. Dollar index has been not so much of a tricky one, okay, until we entered this range. Like, it was very directional. It was really easy to pick up on, like, very smooth dollar index. But now we're kind of entering this a little bit of a range, so I haven't been really as hardlined on using dollar index lately. So, okay, immediately when you see this type of phenomenon here, okay, it's going to take a little bit to get out of this because we create 2 wicks back and forth. Anytime you see that, like, okay, you guys are familiar with Fourier gaps, but what you may not know is how these wicks work, right? Especially when they're long ones like this, they work as inefficiencies as well. So anytime you have kind of, you know, especially on the 15-minute or hourly chart, you have 2 wicks in either direction. A lot of times that's going to call for a range bound marketplace and take a little bit to get out of it. Because the market is not free to move where it wants to go. It cannot move freely until it, lifts the chains up off of them. And lifting the chains up off of them is literally them delivering inefficiencies. Like I'll make an example out of it right here, right? The market is bullish. Yes, we already established that. I was calling for longs as soon as I started the live stream here. Okay, I don't think it was that hard to derive that bias either. So right here, we created an insane inefficiency here. Before continuing higher like it is now, what does it do? Does it just leave the inefficiency and keep on higher and deliver the key levels like this and this? No. It hesitates, drops down, fills in the inefficiency, and now that it has done that and taken out short-term stops, the market is now free to move, okay, to where it truly wants to go, which I believe is this magnet on price right here, okay? So still an ugly range here. I mean, nothing here that I would do anything with, that's for sure, but one thing about trading is things change very, very quickly. So 1 minute I can be saying I don't want to do anything here at all. Another minute I'll be pressing entry. So it might have to explore lower prices. Like whenever I see a build up like this, like sometimes it has to kind of jab down there one more time. So that's why I said, like, it's got to be patient. Even though you could be convicted on one side, which right here I'd be convicted in new day opening gap. Whenever you see price moving like this, you can't chase it. Okay, whenever it's creating wicks back and forth, right, it's really just being held in the range and it's not creating inefficiencies like what you want to see in smooth price action. Look at this. Ever since we took sell side, was there anything smooth in here? Well, it has a nice rally up there, but that's immediately collapses. What do? Sell side delivery, buy side delivery, sell side delivery, so on and so forth. So until we leave this range, right, and create a real rally, it's like basically something like this. Right? I wouldn't feel inclined to do anything. So this is like ideally, if the market is in favor of GK the Trader today, wants to, make my day and offer me something clean, this is what I'll look for. So we shall see what happens. Now, obviously tomorrow is CPI. So days before CPI are tradable if you're trading the AM session. If you're trading the PM session, it's a little bit different of a discussion, okay? PM sessions for me personally are off limits prior to CPI, but the AM session, ideally you want to be done around, max the lunch macro, okay? So that's 11:50 to 12:10. Yes, the shot, agreed. But looking at it here, like in any typical context, like if we're creating an inefficiency right here, like I would be looking to buy this down candle here, put my stop loss down below the low, right, and aim for the high. But I can't do that in this context here with how I'm reading real-time order flow, right? It's a different story if we're creating gaps, right, or some type of breaker, whatever entry model it is, I don't really care. I'm just using it as kind of a stepping stone. We don't have that here. It's just moving sideways. Let me see here. So, we do have a little bit of a cracking correlation here. That's the only good thing I can say about this price action. Okay, here's 10 a.m. wick low. We do deliver that. Okay, whereas NASDAQ does not. So, NASDAQ showing relative strength, while ES easily was able to drop down there. So, we'll see if this can create a smooth rally now in price. Yeah, so ES obviously dove down a little bit more than I would like to see, but I really like that, we obviously have the body above entirely the inefficiency. So And then we work in the very upper end there. Okay, and leave it, which is good. All right, so I'm watching these 2 consecutive down candles right here. Okay, ideally I want to see this kind of act as a springboard up in a new day opening gap right here, that magnet on price. All right, so kind of going off what I was saying here, the subtle SMT divergence we have. Okay, and then obviously on the basis of this 15-minute down candle, the high of it, bumping into it here. I'd like to see if that can yield a rally up into new day opening gap now. Come on, just rally up there. We all know you want it. Okay, we're not surprised. Come on. Just get up on it. Let's get this over with. There we go. What time frame do I use? Well, I always start with the daily chart. Obviously, the daily chart is not much of use lately, other than me specifically watching the upper end of this consolidation range as obviously a ridiculously large pull buy side. Okay, a lot of people are viewing this as a strong resistance level, and I'm kind of just waiting for it to repoke above that. I know we will do it, just a matter of when. Again, I never try to predict unless it's like a really specific day of week and like classic daily profile. I'm not trying to predict when we're leaving the consolidation. Okay, I just find my model. If it's there, I'll trade it. But for this specific scenario right now, with how the daily time frame is, I'm using the hourly chart to kind of frame my bias, right? Which I did here today, and then I scale down to the 15-minute chart to kind of find my key PD arrays, like I did here. I mentioned this down candle deal and new day opening gap, and then anything from 5 to 1 minute time frame. All that is finding entries. Okay, so I'm not really doing much analysis other than order flow, right, on lower time frames, other than, really the main use of it in short is to find my entry points. So all right, so like I said, just like I ordered, I wanted to see this act as a springboard up in a new day opening gap. We did that pretty nicely there. And we're kind of hesitating here, but I don't really think anything of that because we have a severe magnet on price right above us, so it should just slam right up into there. So we'll see. ES has yet to break above that 10 a.m. high. I'll be anticipating of it doing so. So any second now we should see new day opening gap delivered. Now to actually support my model number 2, like what would have been perfect in textbook here is we created a 5-minute ideally inefficiency anywhere down to the 1 minute for value gap, right? Kind of leaving that 15-minute down candle. That right there is quite literally model 2, but we didn't create those inefficiencies. So right now I'm watching and reading price, getting a feel for it. And obviously through the high resistance, still anticipating and calling logical levels right now. Come on, get up there. I like how I really want to see us like have a huge rally above regular trading hour gap high and kind of leave it. So I mean, it's been a little bit stubborn here, but any second now should just create a nice rally up into new day opening gap. Should just pop up there. There we go. That's what I wanted to see. Oh, come on, just a little bit more effort there. Come on. Oh, I think we tapped it. Yeah, we did. All right, we got it. So there we go. New opening gap delivered. Okay. Now I want to remind you guys that I'm out here. Like it wasn't like, oh, okay, sell side and buy side, calling both sides, right? One, actually two logical levels called to the upside. That's all I was calling for as soon as I hopped on stream. Okay, I told you guys why it should do that, how it should do that, and it has done so. Okay, this is the type of stuff. Like if you don't know the why and the how, okay, you shouldn't be trading with live funds. Period. But if you can get on the charts like I just did right now, right in front of every single one of you, right, and have a why and how of how price should deliver, number one, and why it should deliver to certain, logical points of interest, right? You need to have those. Like, it's very critical to know why. Like, why should price be moving? It's not like, oh, we had a crab pattern and the EMA crossed over, so I'm just gonna, I'm gonna buy in here. That's cool if it makes you money. Okay, correct me if I'm wrong, and click off this video if you don't agree with me. But if you're able to kind of view the marketplace like I am right now, okay, then you're definitely ready for live funds. How did I mark that 15-minute liquidity void? I don't know what you're referring to be honest, so you'll have to elaborate with me. So anyway, if you like what you just witnessed there, so far, we're not done yet. Go ahead and hit that like button for me. That'd be appreciated, just to kind of, obviously, you guys show that you're following along here. All right, so like I said, I'm not anticipating a reversal here, not until we reach the highs. So I like how we got that strong push above regular trading hour gap. Okay. And I want to see that remain. I want to see us remain heavy to the upside now. The one with the magnet. Okay, well, this is not a liquidity void. Not to be the guy, not to be that guy, but anyway, this is new to opening gap. Okay. Well, I guess you could call it a liquidity void because there's a literal void of liquidity inside this little separation here. But anyway, yeah, all I did was take the trend line here, and then you hold shift, and then you press it forward. So that's it. You draw both lines. So I don't use any indicators to draw my stuff. It's all organic. I just get on here and draw it all myself. All right, so obviously a beautiful delivery to new opening gap. I told you that price would utilize these down candles and then send us up into there. Done so beautifully. Like I said, we're not done yet. I would anticipate these highs to be delivered out of the marketplace. Okay, ES is following suit just a bit right now. I made 14K in 1 week and lost it all in one day. Well, I've heard worse stories, to be honest, so I've seen a lot. But I don't know, like the question is like, why did you lose it all? Well, I don't know you or know the context, but from my 5 years of experience, I would say it's probably just a very poor reaction to that initial win. Like you got real euphoric and you get that invincible feeling, and then maybe someone on the outside was influenced for you to prove something or be like, I can do this again. Or you just get addicted to that dopamine hit, right? And you get back in, and obviously you have the result that you just told me. But yeah, I've seen it. I've even seen it with my own family. Unfortunately, but I can try to help as much as I can, but it's what it is. So beautiful delivery here. I mean, there was definitely, it's really only one opportunity to fairly get in this marketplace here today, and I annotated that to you guys real time. That was these two consecutive down candles. As for the 9:30 opening, Kate, I have mixed feelings on this. Like, you can buy here if you know what you're doing. However, you're kind of opening yourself up to, in this context here, like a 50-50 coin toss. Like, and if you're cool with 50-50 coin tosses, all right, that's cool, but whenever we open at 9:30 here, there's really one of two things you can do. Like, we already derived our bullish bias beforehand. Okay, so we're bullish. You can buy here and be like, oh, okay, it probably can just shoot up in my favor, right? It could do that. Or it can open, trade down, spike you out, spike out your stop loss, right? Do a little stop rate, classic 930, and then work to the upside. So there's two different scenarios that can pan out at 930. No one truly knows, excuse me, no one truly knows which scenario would pan out, right? So it can either whipsaw you out or you can go in your direction. In this case here, anyone that bought would have went in their direction, but I wouldn't I wouldn't rely on that happening on a consistent basis, all right? So what am I expecting at this point now? Well, I told you guys I'm bullish. I'm not looking for a reversal. We did deliver our first target here on live stream, okay? What I would kind of look for at this point is if we can hesitate here at newly opening gap, and I want to see if we can have a short-term drop down into this 5-minute fair value gap, what will be a 5-minute gap, but the body still remain at newly opening gap, if that makes sense. So the wick does the damage into the inefficiency, but the body remains at newly opening gap and then sends us up into previous daily high. Okay. So we'll see what it does here. If it can form that 5-minute inefficiency, it would kind of look something like this, right? So, I mean, the only thing I can dock away from this potential entry, right, is that it's in a premium, but I mean, that's kind of it's a flawed way of thinking. A lot of people are like, "Oh, you can't buy in a premium." Well, listen, there's exceptions to every single rule. As long as we have yet to reach the higher time or the actual draw, which is the relative highs up here, okay, a long is still valid. So, obviously, it's always going to be preferred to buy, below in a discount, right? But if you're late to the party, and you find a logical market structure supporting entry, then you're good to go. So in this context here, the first call out that I gave here today, right? What would this look like? Okay, ideally you're going to be buying the opening price. That would be the best fill, right? Stop loss will go just below the bodies of the 2 consecutive down candles, and you're just all you're doing is aiming for new to opening gap. So like this is like a bread and butter setup. So you're buying the down candles as an order block, anticipating this to kind of work as an anchor. Stop loss down below, down candles, aim for new to opening gap. So like this here is once again one of those kind of content with enough scalps intraday inside of the daily range that we're in. So let's see what it does here. It's dropping down, obviously off of new to opening gap here. Okay, I want to see where this 5-minute candle closes. I want to see the lower portion ideally of this inefficiency stay open. Now if it wicks down entirely, okay, that's fine, but I want to see that kind of be the damage and then the body remain above. All right, and ideally at this point, ES will leave this inefficiency open entirely because we have buy side of the curve, sell side of the curve with this wick, rallies above. Okay, this here would be technically a balanced price range. And not to mention, ES still has yet to get to that fair value and price right up here. So we have unfinished business to the upside. Press the star at the right on the side of the time frames that you frequently use. They will side by side. You don't have to scroll every time. It hurts to see me do that. All right, let's try it out. Oh, you talking about this? Yeah, no, I don't use that. Maybe I can add the time frames on there. If that's true, I'm not familiar with that, so I'm not tech savvy in that facet. Well, I don't know. I don't know, Chris. It just comes down to, I mean, you made the mistake, or you can do one of two things right now at this point. You can keep digging that hole that you created yourself, right? Or you can look at the size of you, dig out some holes in the side, build that ladder, and gradually climb your way up out of that hole. So, um, you know, you can, make the mistake, learn from it, or you can keep making the same mistake. It's up to you. So, if you want it bad enough, of course, you'll refine things and be real. It's important to be honest with yourself as well. You can't just be like, oh, you know what, it's the market's fault. It's manual intervention. That's why I'm losing money, right? No, it's me. I'm reacting poorly to losses. I'm reacting poorly to wins. I'm too euphoric. I'm too emotional. I need to get my mind right and then come back to the marketplace. Always make yourself established prior to actually trying to come into the marketplace and make money. Establish yourself financially, psychologically, health wise, whatever it is, and then it's just going to be all the more easy to become consistently profitable inside the marketplace. Okay. Do I have a trade tracker template? I'm looking for a new one. No, I don't. I don't use any of those things. I just simply share my stats raw from time to time. But the problem I have with the trade trackers, especially like Furus love those trade trackers like TradeZella. I mean, they love them because it's so easy to manipulate and you know make it look like you're this amazing trader. But that's a whole nother discussion for another time. But anyway, obviously I like how we delivered this 5 minute gap. Okay, I want to see this lower portion, of course, remain open, and then see if we can yield a rally to the upside. Okay, ES almost wicked up in the new opening gap. Not quite, but ultimately should just rise up into there. So assuming you obviously got a decent fill on that, your entry would look realistically somewhere around here, right? Maybe you got slipped up a little bit. And then once again, stop loss will be right down below this candle. And then you aim for previous daily high. So this would be almost a 1 to 3 risk to reward ratio here. Okay. So honestly, aside from this original consolidation, which is normal, this all looks like relatively good price action to me. Like I don't view this as, tough to read because we read it like a book up in a new opening gap. That wasn't hard at all. I view this as a very normal marketplace. I'm not unfamiliar with every movement that I'm seeing here today. In fact, I like what I'm seeing. Okay, at this point, it's just, anytime you have a high probability trade and you want to, like, anytime I'm using the highest leverage, right, of my trading plan, doesn't mean over leveraging the highest leverage. So, like, 2 NASDAQ contracts, for example, I have to be in tune with that daily time frame. And if I'm not in tune with that daily time frame, that means leverage down. Okay, because every single high probability trade is going to be by utilizing that daily candle. Okay, and obviously when you see a daily chart like this, it's a little bit tougher to do that. So as a result, I would scale down a little bit in leverage. Okay. Deshad was trying to make sure I'm not a furu. Well, thanks, bro. Thanks for checking in. All right, hope you got what you wanted. So nice reaction thus far off the 5 minute gap. Like I said, we still have unfinished business out with this magnet on price above us in the premium. I want to see ES just take us home here. And at the same time, I want to see NASDAQ get aggressive to the upside here. All right, so great reaction here. I want to see the swing though be cemented and rise up. I mean, at this point, especially with how the market's been, right, and how it's kind of contracting here, right? If I was in the position, I would be just simply trailing stop loss. So I would just cut risk in half right below this down candle right here. Okay, since we already left the 5-minute gap. And at this point, it's very limited risk versus a very high reward. So if I was in this position, right, and it would come down for your stop loss, you don't view that as a negative thing. It's like, oh, okay, it went against me in this context here. I was, realistically leveraged. I wasn't trying to go for Olympic feats on one singular trade. A losing trade does not mean you cannot trade. It's not a bad thing. It's none of those things. Okay, in fact, every single trader takes them, whether they show it or not. Okay, most of them don't show it nowadays on Twitter, Instagram, whatever it is. But in this case here, look at the reward relative to the risk. This is how you want to manage your trades in a manner that you're keeping your losses very insignificant. And whenever the trade idea goes in your favor, right, and it hits that take profit, you can take 3 losses, and that win overlaps that and you're in profit. So not that you should strive for taking 3 losses in a row and then 1 winner. Okay, I'm just putting it in a context for you. It's not about being right every single time. It's about managing risk, right, and sticking according to the plan. So nice rally there, body above at that point. Okay, with the benefit of this rally here is I would simply just go break even. Okay, so we're going to do that. So at this point, we're break even. And from obviously the call out / entry, that would be 826. About 30 handles there. So if you'd want to take a partial, you can do that. And then you just hold for the take profit above in the relative go highs. That's it. So at this point, you'd be risk-free. Okay, like I said, if you'd like to take a partial, you can do that because we're about 30 handles in profit, a little bit over that, 36 handles. But all in all, the one thing that should remain stagnant right now is that you're at break even and you're holding up into previous daily high. Okay. So literally right here, calling it real time, 2 separate opportunities for you to make ends meet inside of this marketplace. Down candles, buy, get covered at new day opening gap. Oh, once again, we have another rally. Oh, wait a minute, you're buying at a premium. I already told you guys why this would be valid. We have yet to reach the draw on liquidity to the upside. We create a 5-minute inefficiency. What am I viewing this as? Reaccumulation of longs. So when we reach that, smart money would actively be engaged there. And what did that tell you guys? We'll rewind the tape. I said that I would like to see the 5-minute drop down into the inefficiency, but ideally the bodies will stay within new day opening gap. Have we done that? Yes. So this is obviously exactly what I want to see. And now I want to see us take us home up into previous daily high. So we'll see if we can get that. Either one of 2 things are going to take place here. We're going to have a little bit of a rocky ride up into that, or we're going to have a real smooth, sudden rally and just smash straight through that. So yeah, I'm not really I'm not a fan of the shot. I'm not really a fan of taking 1-to-1s. I don't know if you view it that the same way, but I've never been a guy that does 1-to-1 risk rewards because yeah, if you have an edge, you can make money and you will make money, but you're kind of you're just staying at one singular trade, or excuse me, you're staying at one singular tree when there's an entire forest around you. You're not even looking at it and realizing the money that you're leaving on the table. So if you want to take profit at 1R, that's great, like a partial, but how I kind of approach that is I'll take partials and then hold runners for, in this case here, buy side. So it's hesitating it a little bit, but at this point you really don't care what it does, right? Why? Because we're break even. It's a risk-free trade, and obviously there's no risk and a lot of rewards. So this would offer about 820, about 74 handles. So that's obviously pretty good. So we'll see if we can get aggressive here. Okay, obviously like the feedback that we're having. So there's new day opening gap delivered on ES. And once again, I don't expect a reversal at these levels. I just kind of like think about it as a speed bump. Like this is gonna act as a speed bump to then send price up into the highs. Nice. All right, so you have another rally there. You have another, assuming that you're using multiple contracts, right? You can take a partial here, and you don't even like. It's not required to hit the highs, right, to make money. You can partial out at logical price points where it's what 27, 40 handles in profit. So you'd be taking a partial here, what I would advise you to do, and then obviously exit at terminus buy side liquidity. Perfect. So like I said, at this point, there's kind of, 1 to 2 routes this can take, and I would obviously, being actively engaged in this idea here, I would obviously anticipate price to, and want price to get real aggressive and just slam up there, but there is a small chance it can retrace here, maybe reaccumulate this down candle, but ideally it'll just keep on keeping on to the upside. So it looks good to me to go. Come on, NASDAQ, take us home. So congrats to anyone that got the memo on this 5-minute Ferrari gap. Okay, you should be paid here. All right, like I said, if you're using multiple contracts, whether that's micros or NASDAQ, okay, take some off here. Okay, so you made money. Your stop loss is at break even. You have zero risk on the trade. Okay, and you don't even care what it does at this point now, right? That's how it should be. Yusuf, yes we did. Yes we did. Off this 5-minute Ferrari gap. About to get paid my full thing here. We'll see. So once again, we find ourselves now 25. Almost 50 handles in profit with here. Okay. if you were on the fence about taking a partial, okay, you should be doing that right now. So I always say that because it's like, oh, wait a minute, you're so convicted in the highs, right? Why are you not taking it all off at the highs? Well, it's very simple because there's two different scenarios that can pan out whenever we have old highs as a target or previous daily high. Sometimes it hesitates at the high, kind of treats it, as classical resistance, trades off, and then kind of bangs around, and then eventually completes the move. Which is obviously what you don't like. That's not what you prefer to happen when you're in an active trade. But when it does happen, it is what it is. But um, anyway, the other thing that can happen is it can just smash up to your take profit, which is what you'll prefer, obviously. And in this point in context, I really don't see any reason why we should hesitate and do that. I would expect a full run above that buy side liquidity. All right. Deshad, beautiful. So I don't know if you're a signal bot and you needed me to put my entry on here for you guys for the public, which whatever I can do, but I've done that in literally my last live stream here on public. If you need me to do that for you to take the trade, then obviously you shouldn't be trading live funds yet. So stop loss at break even, and I'll keep it there. Perfect. But yeah, definitely should take out the highs there. Letting this thing ride with a risk-free trade. Now at this point, what I like is that we left this Farai gap open. We could revisit that, but ideally we will leave that open with how quickly we left it. Okay. So we're already paid up here, right? When I told you to take the partial, stop loss at break even. Now, this right here, I don't view this as anything you should be scared or wary of. Now, it would be a red flag, right? If I can find my rectangle. There we go. It would be a red flag if we steamroll past this 5-minute Farai gap, right? My trading view will work for me. I don't know what's going on here. Okay, but anyway, watch this 5-minute Farai gap. Okay, I want to see that be utilized as reaccumulation of more longs and then send us up into buy side. All right, so one of two things can take place here. It can kind of bang around, maybe go against those who have been longing, which wouldn't be a problem because we're already paid, and then eventually find the highs, or it can just complete the move now. So if we see any body closure below this 5-minute Farai gap, that's the only thing that would be like, oh, okay, well, it might just drop down to break even. But as of right now, I view this as a very normal, natural, healthy retracement. Okay, especially since we're poking out this swing though here. Come on, NASDAQ. All right, good rally there. Well, I mean, Deshad, I wasn't going against those who do that. Like, there's nothing wrong with copying someone's trades if you trust them and using realistic leverage, all that good stuff. All my every single trade that I take is physically shown on screen inside Discord. Okay, but whenever I get to the public, I'm not opening that up for, legal stuff, and it's not happening. Okay, I've been there. We're good. Do we have a volume imbalance? Might be a tiny separation in there. So yeah, I mean, like I said, this is a very normal retracement here. Okay, obviously if it closes below this inefficiency, that'd be a little bit of a red flag, but still just a very normal retracement. Notice how institutional order flow is this 5-minute inefficiency here. Okay, which is actually great. Now it's like, oh, okay, is this a pyramid entry opportunity? No, no. You don't pyramid in a premium. Okay, you can long in a premium, but you don't add more contracts as it keeps rising up in a premium. That's what you don't do. Okay, if you're already long here, like this is a pyramid opportunity. right? Not up here. Okay, so like you're taking a partial here and you're putting your stop loss at break even for a risk-free trade. You're not trying to add more leverage when we're dropping down in the premium. Okay, that's not how, obviously, that's not how I advise anyone to do it. All right, so ES is realistically dropping down in that 5-minute gap. Okay, now that we've kind of steamrolled through new day opening gap. Okay, we're just like we're ridiculously close to this high right here. Okay, so ridiculously close to that high. All right, so it's getting really aggressive there, but once again, we don't really care about this because we already partialed out. Even though we were very convicted in the high, once again, you can be all the convicted in the world in a specific price point, but partials have never failed to pay. Okay, so obviously, like, what do we call this candle right here? The candle of death comes against us here and completely just faces through this 5-minute gap. Now, does this change things? No, I'm still expecting buy side to get hit. It's going like buy side liquidity at 21,893.5 will be hit. Timestamp it. You know, whatever you gotta do with it, that will be hit. That's not the question. The question is how will it actually deliver that? Will it deliver it in a low resistance fashion like it originally was doing, or will it get up there in a high resistance state of the marketplace? We shall see. Oh, whoops. So kind of one of two scenarios can pan out. It can have like a little bit of a hefty retracement and then finally take us to buy side, or it can come down and take us out of break even, and then I'll give you guys the lesson of, okay, there you go. That's why it's good to take partial. So not just in hindsight where it's like, oh, it was so close to my target and then it ran away from me. I should have taken a partial. No. Take the partial. Thank yourself later. Okay. Deshad, why am I making you nervous? You shouldn't be nervous in a trade. Let me check the 15-minute chart here. So, I mean, yeah, I hear you guys. I hear you. I see the 15-minute for rag gap, but I really wouldn't even prefer to trade up into that. I would actually prefer that to stay open, especially with this right here. You know what? My levels aren't drawn properly. I think I'm gonna go ahead and reboot TradingView. Let me see what I can do here. I think that'll work. Alright, that should have worked. Alright. Let's try that again. Alright, it's not letting me draw my levels, so there we go. So we will reach buy side, but I need this right here to obviously be respected. Okay. So it's kind of just hanging around on this down candle here. At this point, we shouldn't have had this aggressive of a drop down, so it might take the remaining portion of the trade off at break even. We'll see. Okay. By the way, though, just while we're watching this, just beautiful utilization of this time-based inefficiency here. Inversion for rag gap. Okay, this was created right at after the formation of new opening gap. So I place a lot of emphasis on this fair value gap creation. Okay, we extend that to the right side of the chart. Once we get above it, we want to see that utilized as support, and we do that to the T right here. We body above it. This is like one-on-one what you want to see with an higher time frame inversion for value gap. We body above it. Next 15-minute candle does what? Let me see if I can. All right, it's not let me show it, but anyway, opens, trades down, taps the very high end of the inversion for value gap, and then creates this rally. Okay, that's exactly the signature that you want to see. And then you want to see it stay above and complete the buy side. Okay, I mean 9 times out of 10 it's gonna complete the run to buy side and not do this, but right now it obviously needs some form of a retracement. So I think break even's incoming here, so that would be right at 21,828.50, and it just missed that by a couple ticks. Actually, excuse me, 828 flat. So yeah, missed break even by a couple ticks, or it's definitely going to get that at this point. Fell very, very shy of the buy side, which obviously it should have tagged that, but like it may be leaving that intact for CPI. We'll see. But all in all, this to me, regardless of whatever the trade says or whatnot, this to me looks like a pretty clear classic daily buying template. Okay, daily profile. So ES looks a lot different than NASDAQ right now. So ES just looks like a very normal retracement down in the newly opening gap. Plus 5-minute inefficiency here. But ES, on the other hand, looks like it wants to drop down into right here. All right, come on, just get that break even. I think it tagged it. Did it? 828. Yeah, it did. Let me check here. All right, boom. So out of break even. Okay. We took a partial here at about 832, about 50 handles. Okay, so it's obviously good. And then remaining portion is out here at $0. Okay, so beautiful trade idea. Logic was dispelled well in advance. We had the higher time frame draw, obviously. And yeah, obviously just had a really strong retracement there. And that's pretty much it. So I was looking to see if it would drop down to that 50-minute gap, but now it's being reluctant to trade down into there. All right, now we have a nice little rally there. I like that. All right. I'll see what's going on here, NASDAQ. All right, let me check the very low of this candle here. All right, so it just matches the short-term low here, which I was suspecting to be ran out. And I'm watching to see, does it get a real prominent run above these down candles now, maybe create a fair value gap here, and then kind of utilize that and then take us home to buy side. All in all, I was looking for it to maybe create a little short-term spike down in the gap and then utilize that, send us higher, but once again, it's created this large wicking away from specifically newly opening gap, so not just some random reaction. So we'll see what it does here. Okay, I mean, the draw is still pretty obvious in my opinion. Okay, that's right up here. I want to see it reach up into that. Now, honestly, at this point, I mean, it shouldn't have created that drop down, but, you know, it happened. I want to see if it can maybe deliver this 15-minute inefficiency. First of all, what time is it? Okay, 11:09. I want to see it deliver that 15-minute inefficiency right here that I have mapped out. Okay, and then I want to see, obviously, with me anticipating potential rundown into here, see if we can clear out these simultaneous lows right here, and then create another rally, another opportunity to long up into buy side. So yeah, I don't know what to say. That was actually a beautiful session there. I mean, two separate opportunities where you could have paid yourself with me calling things like well in advance, ridiculously in advance. And I mean, if you need, you know, hand holding or you need something like that, I don't know what to tell you. Okay, obviously you need to, I don't know, become more experienced inside the marketplace. But the logic here was undeniable, and you know, everything delivered pretty much like pretty perfectly here, other than not quite at buy side yet, which I'm still anticipating price to reach up into. Love the explanation. Do I do this in my paid group, explaining while taking the trade? Yes, every single day, except the only difference is we'll have the physical entries on the chart. Okay. So yeah. It's kind of falling off in volatility here, so we might be sitting here for a little bit. ES, on the other hand, like, just looks very natural. Like, it didn't create any type of erratic drop downs. It's a very normal, natural, small retracement, and now we've just kind of hesitated since. So I mean, even though I already made money on this long, like, I wouldn't be shying away from re-entering here simply because buy side yet to be engaged. Not to mention, not even like take buy side out of the equation. Look at this large wick that's being left behind. Okay, that's not going to stay intact. Anytime I see a large wick like that, like even if I'm bearish, right, I'll see a large wick here, and then I'll wait for that to be worked in, and then create the real move to the downside. So the fact that we're leaving this inefficiency, aka large wick, open, okay, I'll anticipate price to draw back up into that after delivering this 15-minute gap. So I can't, like, I know where price is going to drop into. I just can't really promise you guys when exactly it's going to happen. If I would have been really hard on him when it would happen, that was literally inside of our trade where we entered the 1050 to 1110 macro. So I was really anticipating large up candles with the help of that macro. So, you know, usually I expect an influx in volatility when we enter the macros inside of the New York kill zone. Okay. Yes, the shot. They're undeniable, very undeniable. It's getting there. Like I said, I just can't promise you guys when it's gonna happen. Okay. Because at this point we're outside of the macro and kill zone. So the close of the macro to me is 11:10, and we just reached outside of that. So no promises on when it's going to deliver. I can just promise you that these will be taken out. So, yeah, that was a great trade. Just obviously the runner wasn't able to tag how we wanted it to. It's being very slow and dropping off in volatility here, which obviously I don't like, but we'll see if it can pick up here. Once again, like ES is showing no weakness at all. Like it's really just, even though it's consolidating, it's been keeping higher. And yeah, kind of same deal with Dow here. Dow is very aggressive to the upside, as you can see. So, okay, what I'm thinking here is while we're waiting for volatility to pick up and a potential continuation play off this 15-minute gap, okay, I would need to see obviously lower time frame confirmation. We're up in a premium. While we're waiting for this volatility to pick up, I'm going to go ahead and just take a max 5-minute break, just drink some water and stuff and stretch out a little bit. So I'll see you guys in about 3 to 5 minutes, all right? Okay. All right, here we are. Oh, there's a 15-minute gap delivered. Oh, let me fix my mic here. Okay, so we were finally able to slide down to that 15-minute inefficiency. Okay, got myself some lemon water here, so we're refreshed and ready to go again. I mean, I don't see anything wrong with this movement here. I think this is very normal, natural retracement. So here we go. Listen, one or two things can take place here today. Okay, we will be offered a continuation setup of off of this 15-minute fair value gap to the upside, completion of terminus buy side liquidity up here, or it'll slam past this, disregard this opposing inversion fair value gap, and that'll kill my day. I'm done. I'm not looking at anything anymore. It's probably going to be range bound in a very odd marketplace with a build up for CPI. Okay, I believe it's going to use this as a continuation, but like I said, there is a chance, as I'm watching this, to trade down below that. And if it does do that, I'm not chasing anything. I'm just leaving the charts as it is, leaving it, and I'm understanding that this would not be an ideal market to make money in. Obviously, it has been thus far. Those two separate opportunities with the bias given, right, to make yourself some money today. Very bread and butter scalp up to new day opening gap, and then we had the 5 minute Fairway gap, which offered once again over 50 handles. Okay. So let's go, guys. Let's run up that like button there. We got 56 viewers and 20 likes. All right, let's run that up. After watching price here, that'd be very much appreciated. Let me know you guys are learning something from this or gaining anything. Okay. So ideally, this body will remain at the high or above the high of this small little gap in price. Okay, specifically because we're trading down into this time-based inversion for Fairway gap. Okay. Taking a look at ES, like ES and Dow are both just very strong. Okay, showing no signs of slowing down at all. And notice Dow already actually reached, I believe, previous daily high. No, okay, this was previous daily high, so never mind. We have unfinished business on all three averages here, okay? This is the draw for Dow, obviously. And then ES, I mean, I haven't been trading it much, obviously. Just has a lot less volatility, not as good of movement as the NASDAQ has. And believe it or not, that was this is the script being flipped here, because back in 2021, 2022, when I was trading it, ES was the one to trade. ES was the one that had, usually on a day-by-day basis, superior moves, easier to see, easier to be a part of, right? But now we fast forward to 2024, 2025, and it's been on NASDAQ. So all right, so I'm watching it here, of course. I want to see a real nice expansion to the upside here. Ideally, we're going to be viewing, or excuse me, not viewing, we're going to be seeing something like this. Okay, so we delivered that 15-minute inefficiency. We're coming up off of higher time frame key levels. We delivered these short-term stops, right? So I want to see if we can create a real prominent expansion to the upside, and then that kind of be the catalyst to take us up into previous daily high, right? US 30, I've never touched that. I think, are you from the US, or are you international? But yeah, I don't, I think US 30 is similar to ES and whatnot, but I don't touch it, or I've never even looked at it either. Now, while we're talking about other assets here, as we're watching for NASDAQ setup to perform here, I got to give a quick shout out to gold here. Gold's been nice. We've been calling this out in my group inside the Discord consistently. I don't see a top anytime soon for gold here, guys. So 3,000 is definitely a certainty, but I believe we're going to see 4,000 by the end of this year on gold. So that's really what I'm thinking at this point. Bitcoin, yeah, I'm not going to get into that. I don't care about crypto, to be honest, but I know a lot of you guys probably trade it. Was that a breaker on the 1 minute chart? Well, let's take a look. I mean, yeah, you can view this up candle as something you'd want to view as support, right? So we have the low, high, lower low, take sell stops into a higher time frame key level, right? And you treat that as a breaker, yes. Now, whenever we're talking about a trade setup, like people are like, "Oh, what are you using? Breaker, Fairway gap, order block? Like, what is it? What are you using?" I don't care what it is. Like, I'm any PD array that I'm entering on, all that is just it's an entry point. That's not my analysis. I'm just entering at a logical PD array, whatever PDA like presents. That's what I'm utilizing. If it's a breaker, cool. I'm gonna take that. If it's a Fairway gap, nice. With that said, when we're looking at a price right here, obviously I want to see, ideally, this keep us higher, and I want to have this little range here, this volume imbalance, and this small little Fairway gap. I want to see that act as a breakaway gap, and ideally, now we'll see a Fairway gap created here. So beautiful retracement here. Should be enough to take us to the upside. Yusuf, you were correct. Narrative: why and how should this trade or this price action deliver into a logical level of buy side or inefficiency? All right, so I'm gonna watch this 5 minute Ferrari gap, and I'm watching this because I want to see price trade through it. Okay, I want to see price really body through that, and if we can do that, that'll give me all the confidence I need that we're gonna be sent home above Monday's high. All right. But right now it's like, okay, why are you not like you're anticipating longs? You've been biased all day. You've already taken an entry to the upside and got 50 handles, this and that. Why would you not be getting in here now? Well, I mean, just look at the body. Look at the candles here. Is this real displacement in price? Not at all. Not at all. It's a very baby rally to the upside, creating these wicks back and forth. Whenever I see that, that's not the order flow that I want to get a part of. Okay, I want to see a real prominent push up in price, ideally creating inefficiencies, and then I'll enter. And the last piece of analysis that I look for before entering is, are we breaking through opposing arrays? In this case here, that'd be that opposing 5 minute gap. Okay. So 2 scalps here today. I can't promise another one will be formed. There's definitely a potential, just because we have yet to reach the previous daily high. But we'll see. Okay, we'll be optimistic here. Now, I mean, honesty, it would have been fulfilling for the ego to have that full runner hit above previous daily high, as aside from, just getting a partial and then getting stopped at break even. Would have been very fulfilling for the ego to get the full target up there, but you try to go against the marketplace, you try to beat the market makers, you try to be greedy, go for more, right? All that stuff. The market will help humble you every single time. That's why I do stuff like deleverage when it's necessary, take partials, go for low hanging fruit, that type of stuff. That's all. It might not sound good because maybe you're being fed a false reality on social media, but you really have to be content with enough inside this marketplace, because you will be smashed over and over again by the markets. Okay, but at the end of the day, the only thing that matters is consistently executing on your model, okay, getting in and out, and that's it, right? If you're getting in here trying to have a home run every single trade, that's really not going to be sustainable. Okay, so Fed testifying. Well, if that is true, I'm unaware of that. All I was aware of was 10 a.m. news driver, which was Fed Powell. But if he's still talking, that could be a reason why we're ranging. We have 10 a.m. And is Trump speaking right now? I'm not sure if that was at 10 a.m. as well, or he's speaking right now. But Fed Powell did speak at 10 a.m., which is why we had this. But after that, there was definitely 2 smooth scalps that could have been taken. But obviously right now we're falling off a little bit in volatility, but that can change in an instant. So yeah, I can't really, especially with what I'm seeing here now, I can't really see myself taking another trade, to be honest. So we'll see what happens, but for now, it definitely still looks overbearingly bullish. Notice how ES and Nasdaq, or ES and Dow, are still showing that relative strength. DXY is supporting by obviously dropping off to the downside. Anytime you're looking at dollar index, you want to see it do the opposite of what Nasdaq and ES is doing. So if you're long bias, obviously you want to be able to frame a short scenario on DXY. So in this case here, I believe DXY swept this high. Yes, it did. DXY comes up, sweeps Sunday's high, creates an intermittent term high, changes day delivery, comes back up, inefficiency, and ever since then it's just been all prominent hourly down candle. So this obviously supports my long bias up into here. Okay. So I want to see this 50-minute create a rally up into previous daily high. We'll see if we can get the volatility. But at this point, it needs to get going here, because look at this 5-minute consolidation. That doesn't look favorable at all. So in terms of taking another trade, like I wouldn't touch anything. Like right now, I wouldn't touch anything at all. You see how every single, like all these candles are contracting, now we're sliding down again. This is like, especially with the, like, I'm not, like, basically I'm not interested in taking shorts. It's not happening. Okay, with the draw being up here, that could just be a catalyst for, you know, CPI to run that out tomorrow. Okay, and once again, okay, I'm not going to be live streaming here on YouTube, probably not for another 3-4 months. So if you want to hear from me again, okay, I will be trading live inside of my Discord. Okay, you don't have to pay me anything. You can trade with me 7 days for free if you would like. Test out the water, see if you like what you're seeing, and tomorrow we'll be trading CPI live after the news release. So regardless if you're with me or not, be careful, be safe. Okay, the protocol for CPI is always obviously wait until the news release and let that come out, and then you wait for 8:50 a.m. 8:50 to 9:10 a.m. A lot of times, kind of a 50-50 shot as a recent, but more times than not, you're going to find yourselves a very good, at the minimum, a scalping opportunity inside of that 8:50 to 9:10 macro after CPI has been released. Now, if you don't get anything there, well, guess what? There's a brand new opportunity. You wait till 9:30. There's your second opportunity right after 9:30, usually, if it creates a Judah swing or whatever else. And then you have the whole 10 to 11 a.m. time window. So kind of 3 separate opportunities that my group and I look for when we're trading post CPI, not at the release. So, okay, ES is actually dropping down now. I was going to say still relative strength being shown, but ES is dropping down as well. I'd like to see if it can poke out this swing though. So if we body through specifically, if you take this wick here, so whenever especially when I see a smaller inefficiency, I always reference the wick that's right below the gap. So I always reference the wick and specifically its midpoint. Okay, so if we see any body through on the 5 or 15-minute chart, the midpoint of this discount wick, okay, that would conclude the session for me today. Now I'll just come back for CPI tomorrow. Okay. So this is what I'm watching now. This annotates midpoint of this wick. So, yeah, that would conclude my day if we just dump below that. Now, once again, I mean, I'm obviously long biased. I want to see higher prices. I have been paid, but not as much as I wanted to. We do have around sell stops here. I can't promise volatility will be injected here, okay? But if it is, right, I would like to see something like this. And notice I have this right here because that's what I want to see. I want to see real decisive elephant in the water type displacement to the upside. Ideally creating some type of inefficiency, and then I would look to enter here on a hypothetical breaker plus for ray gap, right? And then I'll look for the highs. So whenever you have a draw on liquidity that's higher and you have the volatility giving you stuff like this, that is something that you take every single time. No questions asked. You're right on that. And I mean, this is like a bread and butter setup right here. It's just repeats more times than I can possibly tell you guys. What's my Discord link? Well, it should be in the, yeah, it's in the pinned comment in the chat. So I think you may have to scroll up. I'm not sure, but it's in the, I have it pinned. So if you tap it, it'll show you this blue little link, and you just click that. So I like how it's hesitating. Okay, the bodies are ultimately respecting specifically this Balanced price range. Or excuse me, inversion for value gap. Okay, so as long as the bodies are staying above here, this is definitely valid and a potential to send us up here. All right, welcome in, Eric. Welcome in. So, yeah, like it can really go one of two ways here. I'll get like an undeniable clean model, or it'll just keep ranging like this and then maybe drop off. We'll see. We'll see. It was already kind of a red flag that it got so close to the real draw that we were calling out and then slammed off, right? But there definitely is. I've seen scenarios that pan out where, we trade down to a logical 15 hourly level and then we complete the move above. So it's like, oh, wait a minute, you're so convicted in where price is going to go. You know where it's going to go. Why are you not just buying right here now that we traded at that level? Well, I'll tell you why. My precision is dulled when we're in a time period like this with low volatility. So two factors coupling together right now that gives me less confidence here than I had for, say, when we longed that 5-minute gap, right? Right here, we have low volatility, and it's 11:35 a.m. So we're not inside of a macro. We're not inside of a kill zone, right? And all my highest probability trades, like 98% of them, come inside of the kill zone / macro, because that, usually is when my repeating models perform again and again and again. All right, so that's kind of the candle I want to see, but the question is, can this continue? Can it really just have a prominent run up there? We shall see, won't we? So notice how ES does the same exact thing. It institutional order flows its respective 15-minute fair value gap. And I love the rally that we're getting up off of that. So we'll see what ensues here. All right, we now just created the change of state delivery above this down candle. All right, so not a bad rally there. I'll be optimistic. Ideally, a hypothetical entry to get back in sync with that draw to the upside would look something like this. Okay. I'm not in an entry right now. I told you guys that. And I would like to see a real, I want to see a real elephant in the water displacement above this swing high here. And ideally above this gap. And then I'll look to enter somewhere in this vicinity here. Okay. And then obviously apply a minimum 1 to 2 risk to reward up on that. So. But you see that, I'm immediately calling bullshit on this right here, because although I'm so convicted and I have an audience right now and I'd love to get back in here and make more money and do more, the model's not there. Okay, there's very specific components that bring together a model, and if I'm not executing on my model, what am I doing? I'm gambling. Like, if I'm not exercising my edge, right? That's the only reason why we can make money in this marketplace and pay our bills and do all that good stuff. Is because there are repeating phenomena inside of this marketplace. If the markets did not repeat, there is no edge. Like, come on now. Like, whatever your strategy is, you're trying to tell me that it's random, right? If it's random, you can lose money at any point. There's no statistical edge to it, right? So you need to identify the most important thing I can tell to anyone that's an aspiring trader. You're like, oh, this guy pays his bills with trading and whatnot. I want to be like that. Well, guess what? The number one thing you should do, assuming you have yourself established, right? You have a little bit saved up. You're good in the head. You have disciplined habits. The number one thing you need to be doing is getting into live price action every single day, or at least as much as you can, and identify repeating phenomenons of price. And once you pick up on those subtleties with repetition over and over and over again, you have yourself something that is invaluable, and that is an ATM machine that can pay you out on a consistent basis. Will you take losses in between? Yes, of course. You're a human. You're going to take losses, but That's when risk management seeps in. If you know how to manage risk, you know how to make your losers a lot less significant than the winners. It doesn't matter. It doesn't matter if you take a loss, okay? The long term will take care of everything. Tiki, you were correct. We are approaching upon that lunch macro. So about 12 more minutes we'll be in that lunch macro. We'll see what takes place here, okay? We're spending a little bit too much time in here. I mean, I like the reaction off the 15-minute gap. Yeah, we shouldn't have any trouble getting to buy side here unless we just have continued low volatility. All right, right there. I like that rally there. Okay, I like the change of state delivery that just ensued, but we need to really just smash above now. So right when we trade above this 5-minute down candle, that kind of would set the catalyst for a potential run continuation. But yeah, I really hope at least one person like listen to that. Like that is the main, like if any new trader comes to me, you don't need to buy a course, you don't need to do anything like that, okay? Get into price action and get to work. Okay, if you're lazy, I mean, it might not work out, but like as soon as you can, get into live price action, study it, find one simple thing that repeats. And if you pick up on that, all you need is one model. That's it. Okay, you don't need to hop on the latest buzz on Twitter. You don't need to, you know, hop on all the trends and oh now all of a sudden I'm a CRT trader, right? You don't do that stuff. Just find one singular model that makes sense to you, get in and out, and execute it on a consistent basis. Okay, that's the name of the game. That is quite literally the holy grail right there. There you go. Lunch macro 11:30 to 1:30 as ICT teaches. Yeah, I don't personally submit to that. I just utilize 11:50 to 12:10. But if that's what works for you, then that's good. But yeah, I just trade the kill zone 8:30 to 11 a.m. Okay, and then or excuse me to 11:10 a.m. and then I'll look for something specific to take place around 11:10 to 12:10, and then kind of anything past 12:10 it's kind of like my dead zone, and then I'll come back at 1:30 p.m. for the PM kill zone. So 1:30 to 3 p.m. So those are kind of my working hours there. Like yeah, kind of setup take place at like 12:30. Sure, it can. And at 1 p.m., yes, setups do take place, but you have to be really in tune with current price action, and it doesn't happen that often. Usually your best setups are going to come either obviously the New York kill zone or PM kill zone. Do I have a model that is easy to backtest to give us a starting point? Yes, absolutely. Yeah. Like I said, you should definitely forward test first, in my opinion, and just watch live data and pick up on something that repeats, and then you can maybe backtest it and kind of refine your edge a little bit. But once you find that model, like don't get into this never-ending cycle of just trying to learn new concepts. Okay, you found your model, you've proven to yourself that it repeats. From however long of repetition, and that's it. You've arrived. Now all it comes down to you making money. The determining factor in that is like how you actually operate. What's the operator doing? Is the operator taking one little minor loss and then all of a sudden revenge trading, scaling up leverage, and doing all these things that lead to unprofitability? That's the telltale sign. So, but if I had to pick one model, like Anthony mentioned here, if I had to pick one of my models that only three of them, okay, it's not like this large plethora of models, but if I had to pick one of them that's the easiest to backtest, I would say it's model number 3, just because I would say it repeats more than anything else that I use. I would say that. So it's definitely the easiest to backtest. It takes place at least multiple times a week at the minimum. And yeah, watching live data right here, I still don't like the volatility. So if I'm going to enter on here, right, especially if I'm entering outside of a kill zone or macro, right, I need to see a real volatility proving to me that this thing wants to move. And in what direction? Well, that's where bias comes in. That's where all that good stuff. Like, if you don't know where price is likely to draw to, then you shouldn't be trading at all, right? If you don't, have logical levels, like in this example here, we're looking for price to trade up in the previous daily high. If you don't have that, you don't have anything. So you just sit to the sideline and preserve your money. Okay, but obviously, I'm knowing where price wants to go. It's just a matter of, does it present the model? And in this case here, it did, but that's another story. I mean, yeah, Tiki, like I explained, like if this thing does trade lower, and let's say it trades to, for instance, this balanced price range, that just kills my day. I'm not interested at all because it's probably just going to be range bound and do some erratic things. So until CPI, that is. Once again, PM session is off limits for me, guys. At prior to CPI, okay, the max time window I'm looking at is 11:50 to 12:10. Nothing after that. After that, I'm closing the charts, going to enjoy my day, and then I'll be making my money minimum at 8:50 a.m. After CPI release. Yo, Broly, did I trade today? Yeah. So, there was two separate scalps. One here, I didn't take this one, but obviously it was called real time here. Two consecutive down candles, smacks that, and then the scalp was basically from this two consecutive down candles off the SMT right up into new opening gap, and then the best one, in my opinion, today, which should have hit by now, it just didn't have the volatility, was this 5-minute Ferrari gap entry, which we were actively engaged in, down to new opening gap, plus that inversion I keep telling you guys about. And that offered about a little over 50 handles for a partial, and then missed the runner by about 30 handles or so. I mean, yeah, time is the utmost importance. I mean, let's get that out of the way. I mean, if you guys don't submit to time and then price, like Dave, I have a lot of respect for Dave, but I don't agree with everything that he says, particularly with price is more important than time. Whenever I first started and I was actually finding and refining my edge, right, like years and years ago, I was literally getting on here and I would literally just plot out time windows. Like I would, so like, for instance here, right, there's no 8:30 news release, so I'd just be simply watching price from 9:30 to 11:10 a.m. So back in like probably 4 years ago, this is what I would do. I'll be like, okay, I'm gonna get in here, I'm gonna plot this line and this line here. Everything inside of here is like, that's what matters to me. That's where I'm looking to take a trade. Anything outside of these two lines here is irrelevant. I could care less. I don't care. If I find my model in here, I'm gonna trade it. That's how I used to approach it. I still do approach it in that context. I just don't draw physical lines, okay? But that's how I used to go about it. So it goes without saying that the New York session kill zone is the best time window to trade, in my opinion. So as time goes on and we keep moving sideways here, my confidence dwindles with this price action here. So I told you guys, timestamp it. The buy side will be hit. I just cannot promise you when, and especially when we're moving like this. So it's either the buy side is going to be ran for, or it's going to be range bound into the close for CPI. So that's the only thing I know for certain. What time zone I am? I'm in New York time zone. Countryside of Pennsylvania. So the only thing we have going for us here is we didn't disregard that discount midpoint of the wick. But once again, I mean, when you have this consolidation started at 11 a.m., it's now 11:48, almost an hour of consolidation, right? After we already, had an attempt to get up to a buy side liquidity pool, my, confidence in this dwindles. I told you guys real time, why would I not be buying this? It wasn't enough. Is this an elephant in the water type displacement? No, not at all, right? I want to see a real prominent push above. I told you what I wanted to see if I was going to enter, and that would be something like this, but we didn't get that. Do I use SMT as a confirmation? I mean, not confirmation, I would say, but it's definitely an added confluence that I use for every single trade. SMT is very, very powerful if you already have a predetermined bias. So, like, yeah, I guess you can say, like, it kind of confirms your entry point. So, yeah, I'll say yeah. But never use it as the whole trade idea. I see a lot of people do that. I don't know why. I mean, it's not a secret as to why they're unprofitable, but definitely use SMT as a tool slash indicator. It really should be the only indicator that you use, in my opinion. SMT. So yeah, I mean, whenever I see this, right, I want to see a 15-minute swing low formation. This doesn't look like a, anything I would like to trade. So I'm going to look to close this up here. However, we are entering the lunch macro. I told you guys I'll stick with you through that, so I'm a man of my word here. We'll do 1150 to 1210. We'll see if that can spike in some volatility. But after that, like I said, that's off limits for me. I'm not looking at the charts. Okay, CPI protocol, and I'm not going to look to take any entries till 8:50 a.m. tomorrow morning inside of my Discord. All right. All right. Yep, Deshaun. Enjoy the rest of your day, brother. It was good chatting up here with you today. So, yeah, I'll catch you in the next one. So, yeah, still an hour long of consolidation here. My confidence in this price action is really getting low here in terms of actually delivering smoothly. Yeah, I don't know. This was a textbook entry. This was beautiful. It offered 50 handles. That's more than enough on a day like this. But it really should have tagged that buy side. Okay, but it's the day prior to CPI. Stuff like this can happen. But all in all, this was an amazing entry point off of the balanced price range, new to opening gap, etc. Okay, and then we're also utilizing real time the relative strength shown on Dow and ES here. Okay, and then not to mention DXY formed actually a beautiful sell model here. All right, so we dropped down one more time. I told you guys I'm watching the midpoint of this wick. Okay, I'm always watching the midpoint of the wick that's below the inefficiency. If we trade through that, that's dead for me. Okay. Carlisle, yeah. So this entry right here, what I was just describing, that was the entry that I took and showed here. And once again, we got the partial, and then right down to break even, we were taken out. But aside from that, nothing. So I'm watching to see if we get a close below the midpoint of this wick. If we get that, that closes my session, and I'm entering CPI protocol. Okay, any closure below 21,810, I would expect this price action to not be great into the close. So I'm watching the 15-minute. Okay, the body's still above. 5-minute still above. We'll see what it does here. I mean, I could logically at this point wouldn't be surprised if it attacks this swing point here below the 10 a.m. news low. But once again, I'm like, with how strong the draw is up here and how it's going to lead this for CPI now, like, I'm not interested in getting short. Okay, especially since we already got paid on longs, or at least what the market allowed us to get paid on, right? So I think we might have closed. No, we didn't close below yet. Adolfo, you don't have to pay me anything. You can come into my Discord and trade with me 7 days live for free, and then cancel it. Never see me again. But yeah, I offer a 7-day free trial. So it just fell shy of that high there. So once again, if this is left intact, okay, I mean, obviously way too smooth of a top here that I'm not like confident in. I would anticipate CPI to kind of rip above there. We'll see what the volatility ensues with CPI, but at this point, there's not much for me to do here. So really prominent body below the midpoint of that wick. So it definitely could drop down to the 10 a.m. low, but I don't expect much from this price action, guys, okay? Nothing in here is algorithmic other than what we had here initially with this run up. All right. It's probably not going to be clean for the PM session at all prior to CPI. So I might turn CPI protocol. Yeah, that's it. So I'll be trading live 8:20 a.m. tomorrow morning. That's it. So I'm going to close up here for the free YouTube stream. Hope you guys got something out of this. I hope I was able to inspire at least one of you, teach you something, learn something new, all that good stuff. Appreciate you guys for watching. Hit that like button, and I'm going to close up here. And it was a pleasure, obviously getting on here and taking care of business live.